Hi, I'm Lee Stone, and this is your UFX Bank Week in Review. Today we will cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover the headlines of the week, let's look at last week's risers and fallers. The euro fell every day on the week versus the dollar. The euro had one of its largest weekly drops of the year, losing nearly 3.2%. The pair was last trading at 1.2905. The pound fared slightly better against the dollar this week. The pound-dollar finished virtually unchanged and was last trading at 155.45. The dollar made solid gains against the yen this week, gaining 2.1% and bringing the dollar back to 83 levels. The pair closed Friday at 83.03. The dollar fell slightly against its Canadian counterpart, dropping 0.32% on the week. The USD CAD was last trading at 0.9916. Crude oil dropped 3.6% in a tough but mixed week of trading. February crude orders were last trading at 88.03. Gold also had it tough, falling on every day of the week for a total weekly loss of 3.67%. The precious metal was last trading at $1,368 per ounce. In news this week, the U.S. economy launched its consumer credit gauge for the month of November. Though the report came out beating its forecast of negative 2.5 billion, it still fell short of October's reading of 7 billion. The non-farm payrolls report came out on Friday, and the news was somewhat mixed. Though 103,000 jobs were added in December, the forecast was still set at 150,000. Still, there was improvement from the previous month's 71,000, and the unemployment rate dropped from 9.8% for November to 9.4% for December. The Eurozone unemployment rate remained the same as in the previous month at 10.1%, which was as the market and previous estimates had expected. To discuss these, though, and other topics today, let's welcome analyst Martin Smith. Hello, Martin. How are you?
Very well, thank you, Lee.
So last week, non-farm payrolls added 103,000 jobs. Okay. Also, the unemployment dropped to the lowest since May 2009. When do you think we might see a recovery in the job market?
Well, certainly it will take time. Last week, the Fed had pointed out that the job growth was still slow, and the attractive picture drawn by the ADP employment report, where apparently U.S. private employers had added a staggering 300,000 jobs, didn't quite hold up to closer inspection. Labor conditions are improving, yet they do remain weak overall. So I think it's going to take some time before we see any really significant improvement in the labor market.
So what's happening then in the Chinese economy?
A report came out in China stating that inflation will slow down during the first quarter of 2011. China still continues to tighten its monetary policy and has also closed the factories to meet energy efficiency targets. Last week, a report showed that China's purchasing managers index declined to 53.9 in December, compared to 55.2 reading in November. This is the first decline in 5 months, while market expectations were set at 55.
So what is your opinion then on Bernanke's calls before the Senate committee for a plan to reduce deficit spending, or reduce the deficit in the U.S.?
Bernanke expressed his views on the labor market situation last week, which looks relatively improved. However, the Fed chairman is a little bit frightened by the high unemployment level, which is looking like a threat to the recovery. I agree with Bernanke, as we can expect a stronger recovery in 2011. We have to keep in mind, though, that housing activities are still expected to remain somewhat depressed. Bernanke also made a comment suggesting that the rising budget deficit has been caused by the US spending problem, and he called for prompt adoption of a plan to reduce deficits, unquote. I believe that if the US fails to do so, it could lead to higher rates.
Thank you very much, Martin. Well, unfortunately, that is all the time we have this week, so our Ask the Broker question will have to wait until next Sunday. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit questions to our weekly broadcast, please email your questions to Martin Smith at AskTheBroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.